Welcome back, everyone, to the Deep Dive. Today, we are going to take a deep dive into something that I think a lot of people are going to be interested in. This is the latest unemployment insurance weekly claims data. It was just released by the Department of Labor. And we are going to break it all down for you so you don't have to go and sort through all the data yourself. We are going to give you the crucial insights so you can really understand what's going on right now in the labor market.
Exactly. I mean, there's a lot of data in these reports. We're going to look at initial claims. Those are the first-time filings. We're going to look at insured unemployment. So those are the people continuing to receive benefits week after week. We'll look at the raw numbers. We'll look at the seasonally adjusted data. We're going to compare it to past weeks. And we'll even look at some data for federal employees and newly discharged veterans.
Okay, let's jump into this report. So the report for the week ending March 1st, it shows a pretty big drop, a pretty significant drop in seasonally adjusted initial unemployment claims. It came in at 221,000 new claims, and that was a decrease of 21,000 from the previous week, which was 242,000. So,
Yeah.
on the surface, that sounds like good news, right? Fewer people filing for unemployment for the first time.
Yeah, it definitely is a notable decrease. But it's important to look at this in the context of the 4-week moving average. So the 4-week moving average for seasonally adjusted initial claims actually saw a slight increase to 224,250.
Yeah.
And that 4-week average really helps smooth out the volatility that you see from week to week. It gives you a better sense of the trend rather than just a snapshot in time.
Yeah, that makes sense. It's kind of like we said, the headline number, that 221,000, that was a big drop. But when you zoom out and look at the 4-week moving average, it's telling a little bit of a different story. It's suggesting that maybe things aren't trending down quite as much as that 1 week might make it seem. So what about the unadjusted numbers? Do they paint a similar picture?
So the unadjusted initial claims for the week ending March 1st, they actually increased slightly to 224,689. Now, the Department of Labor points out that this was less than the typical seasonal increase that you would expect to see at this time of year. And so, they adjust the numbers to account for those seasonal factors for, weather and things like that.
Yeah, that makes sense. The seasonal adjustments, they take out those predictable changes, right? So we can really see what's going on underneath. So the fact that the unadjusted increase was less than expected, that could be a sign that the labor market is, maybe a little more resilient than we might have thought. So how does this week's data compare to last year?
So for the comparable week in 2024, the unadjusted initial claims were 214,424. So we are seeing a slightly higher number this year.
Okay, so a little higher than last year at this time. And this report also gives us a breakdown by state, which is really interesting because it helps us understand what's happening in different parts of the country. Are there certain areas where things are getting better or worse?
Absolutely. So looking at the week ending February 22nd, which is the week prior to this main initial claims number that we were just talking about, Massachusetts actually saw the largest increase. They had 3,808 more initial claims than the previous week. And the report specifically mentions layoffs in educational services as a key factor.
Wow, educational services. You don't always think of that sector when you think about layoffs. It's really interesting to see how different sectors can be affected at different times. So are there any other states that stand out in terms of increases?
Yeah, Rhode Island had a substantial increase of 2,081 initial claims. And the reasons they cited were a little bit more diverse. They mentioned transportation and warehousing, accommodation, food services,
Oh.
construction. They even mentioned healthcare and education again, and then Illinois and Wisconsin. They also had notable increases. And construction was mentioned as a factor in both of those states.
Wow. So you can really see how the labor market is being impacted by different things in different parts of the country. You've got education, you've got construction, you've got some of those, kind of more cyclical industries. So it's not a one-size-fits-all situation. Now, on the flip side, where did initial claims decrease the most?
So Kentucky had the biggest decrease, down by 3,074. And then California, Tennessee, Washington, and Texas all saw pretty big drops as well. But, and this is kind of where it gets a little less clear cut, the report doesn't always give us the specific reasons for these decreases. It's nice to know where things are getting better, but it's hard to draw too many conclusions without knowing why.
Yeah, it's like half the puzzle is missing, right? You see the numbers going down, but you don't know what's driving that change. Okay, let's move on to insured unemployment now. So this is the number of people who are continuing to receive unemployment benefits. What does that data tell us?
So for the week ending February 22nd, the seasonally adjusted insured unemployment rate remained steady at 1.2%, which is unchanged from the previous week.
Okay, so the rate stayed the same, But the actual number of people who are receiving benefits, that did change, right?
Right. So the seasonally adjusted insured unemployment level increased to 1,897,000. And that's an increase of 42,000 from the previous week's level, which was actually revised down slightly. These revisions happen from time to time as more complete data comes in from the states. It's just part of the process.
Yeah, I was going to say, I've noticed those revisions before. It's not unusual for them to tweak those numbers a bit as they get more information. And just like with the initial claims, there's a 4-week moving average for insured unemployment as well.
Exactly. And that 4-week moving average for seasonally adjusted insured unemployment, it also saw a slight increase up to 1,866,000. So even though the rate held steady, the number of people continuing to claim benefits has been ticking up a little bit over the past month.
So this is an interesting point, right? It could mean that while fewer people are losing their jobs initially, like we talked about with that decrease in initial claims, the people who are unemployed, they're having a harder time finding new work. It's almost like the flow into unemployment is slowing down, but the flow out isn't keeping up.
Yeah, that's a really good way to put it. Now, if we look at the unadjusted figures for insured unemployment for the week ending February 22nd, the rate increased a little bit to 1.5%, up from 1.4% the week before. And the unadjusted level of insured unemployment, it was 2,231,273, which is an increase of 68,804 from the prior week.
And again, it's helpful to put that in context. Where were we last year at this time in terms of unadjusted insured unemployment?
So a year ago, the unadjusted insured unemployment rate was also 1.4%, but the actual number of people was lower. It was 2,113,068. So compared to the same week in 2024, we are seeing both a slightly higher rate and a larger number of people receiving benefits.
Okay, so both the rate and the number are up a bit from last year. And one thing I always find interesting in this report is the breakdown of insured unemployment rates by state. You can really see where people might be having a tougher time in the job market.
Absolutely. So for the week ending February 15th, the states with the highest unadjusted insured unemployment rates were Minnesota, Massachusetts, Montana, and Washington, all at 2.4%. And then California and Illinois were right behind them at 2.3%. So if you're in one of those states, or maybe thinking about moving to one of those states, it might be a good idea to, do a little bit of research on the job market there, just to see what you might be getting into.
Yeah, that's good advice. Forewarned is forearmed. Okay, so we've talked about initial claims, we've talked about insured unemployment, but there's also this other category in the report. It's the total number of continued weeks claimed for benefits across all programs. What can you tell us about that?
Sure. So for the week ending February 15th, that total number was 2,194,745. And that's actually a decrease of 28,985 from the previous week. But it's still a little bit higher than the same week in 2024, which saw 2,121,432 continued weeks claimed.
Okay, so a decrease week over week.
Yep.
It's still higher than last year. Interesting. Now let's shift gears a little bit and talk about the unemployment claims related to federal programs. What's the latest for former federal employees and newly discharged veterans?
So for the week ending February 22nd, initial claims for UI benefits filed by former federal civilian employees, they actually increased quite a bit. They went up to 1,634, which is an increase of 1,020 from the previous week. That's a pretty big jump. For folks who are following federal employment, that's something to keep an eye on. But on the other hand, initial claims filed by newly discharged veterans, they decreased slightly down to 312 during that same week.
Okay, so kind of going in opposite directions there. And what about those who are continuing to receive benefits under those federal programs? What are the trends there?
So for the week ending February 15th, both of those groups saw small decreases in continued weeks claimed. So former federal civilian employees claiming benefits totaled 7,412, which is a decrease of 200. And newly discharged veterans claiming benefits totaled 4,306. And that was a decrease of just 3.
Got it. So for federal employees, a big jump in new claims, but a small decrease in continued claims. And for veterans, small decreases in both. All right, last but not least, the report mentions extended benefits. Can you remind us what those are and what the current situation is?
Yeah, so extended benefits, they are like an extra layer of unemployment benefits. They kick in when regular state and federal benefits run out. And it usually happens in states where unemployment is really high, like it's kind of a safety net. But the good news is that for the week ending February 15th, no state was triggered onto the extended benefits program. That's a good sign. It means that, while we're seeing some ups and downs in the labor market, overall things aren't so bad that people are exhausting their regular benefits and needing to tap into this extended safety net.
Yeah, that's definitely a positive sign.
Yeah.
Okay, before we wrap up, there are some technical notes in the report that are actually really helpful in understanding all this data. Can you give us a quick rundown of the key points?
Yeah, absolutely. So I think one of the most important things to understand is the difference between initial claims and continued claims. Initial claims, like we talked about, that's when someone first files for unemployment. Continued claims, that's when someone is already receiving benefits and they're claiming for the previous week. So initial claims, they're kind of like a leading indicator. They give us an early warning sign that job losses might be increasing. Continued claims, that's more of a snapshot of the current situation. It shows us how many people are currently relying on these benefits. And then the report also uses seasonal adjustments to smooth out the data and remove those predictable fluctuations that happen throughout the year. Like, maybe there are more layoffs in certain industries during certain seasons. So those adjustments help us see the underlying trends better. And then the last thing to remember is that the data can be revised as more information becomes available. So sometimes those numbers might change a little bit from week to week as the Department of Labor gets more complete data from the states.
Okay, so to sum it all up, what are the key takeaways for our listeners from this deep dive into the unemployment insurance claims data?
Well, I think what's really interesting here is that we are seeing kind of a mixed bag. On the one hand, we had that big decrease in seasonally adjusted initial claims for the latest week, which, that could be a sign that the pace of job losses is slowing down. But on the other hand, we also saw a slight increase in the level of insured unemployment. And the 4-week moving average for insured unemployment also ticked up a little bit. So that suggests that people who are losing their jobs, they're having a harder time finding new work. It's like they're getting stuck in unemployment for longer. And that could be a sign of some underlying weakness in the labor market.
Yeah, it's like a tug of war, right? Some forces are pulling in a positive direction, some are pulling in a negative direction. And it's hard to say definitively which side is going to win out. And then we also saw those regional variations, right? Some states are seeing increases in initial claims, some are seeing decreases, and certain sectors like education and construction, they seem to be feeling the pain a little bit more in certain areas. So it's definitely not a uniform picture across the country.
Exactly. The labor market is constantly evolving, and different industries and different regions, they're going to experience those changes in different ways. The fact that no state triggered extended benefits, I think that's a positive sign. It tells us that we're not in a widespread recession or anything like that. But the fact that insured unemployment is trending up a little bit, that's definitely something to watch.
Yeah, it's something to keep in the back of our minds as we try to make sense of what's happening in the economy. So here's a final thought for our listeners. As you go about your day, as you read the news, as you talk to your friends and family about the economy, think about this. How might this combination of fewer initial claims but rising insured unemployment shape the economic future? What does it tell us about the strength of different industries? And what does it mean for the people who are out there looking for work? It's a complex issue with a lot of moving parts. But by paying attention to these trends and understanding the data, we can all be a little bit more informed and a little bit more prepared for whatever comes next. Thanks for joining us for another deep dive.